Good morning, everybody. Welcome to our Saturday live show. Thing as no point, no cost. Yes and no. So how does that work? So most consumer, that means your client or yourself, say when I do a no point, no cost loan, as long as I don't have to spend any money, to me, that's no point, no cost. Technically, that is true. Yes and no. So let's dive deep into how no point, no cost works and how the lender price the mortgage rates and how mortgage brokers makes money. So with no further ado, I'm going to show you what last Friday, which is yesterday, pricing from one of our many lenders that we can choose from. So that way we can go through an example, a live example of how pricing affects your mortgage and how much interest you're going to pay throughout the life of the loan. Okay, so Anthony, why don't you go ahead and go to the next slide for me, please? All right, so as you can see, this is yesterday's pricing from one of our investor or lenders that we choose from. As you can see from the top, you see rates on the left all the way down from 1.99 all the way to 2.99. On the next column to your right of that, you have 15 days on top. And then, of course, we have pricing. And then 30 days and 45 days. Okay. So you're going to ask me a question. What is 15 days? What is 35 days or 30 days? What is 45 days? Well, what that means is when you lock in the rate for either 15 days, 30 days, or 45 days, that rate that you just locked in is guaranteed for your client or yourself for that duration of period of time. So it's 15 days, 30 days, or 45 days. So your loan officer should know how many days it needs to close that deal. So for instance, I'm going to give you a quick example. If I lock in a loan for 15 days, right? Because the pricing is good, I like it, everything else, but the loan officer say, well, it's going to take me 30 to 45 days to close the deal. Okay, so I'm sorry, somebody say we cannot hear you. One second, guys. Can we, let me check. All right, guys, can you hear me okay? Everybody? More? All right, I apologize, guys. We didn't set this up. So this is what happened when you go live, right? I mean, technical difficulty happens all the time. So hopefully, one of our viewers just text me. If I just text them back, can you hear me okay, guys? Yes. All right, perfect. We can hear you. All right, well, I can hear you or you can hear me. All right, so for 15, 30 days, and 45 days. So let's go back to that. So if I lock in the rate for 15 days because the pricing is favorable, the rate is favorable, everything is favorable, but it takes you or the loan officer 30 days to close the deal. What happened? Well, again, when you lock in a specific rate for a specific duration of time, that is guaranteed for that duration of time. After that, then you have to do an extension, you have to do a relock, so your rate goes away. right? So again, just like saying, you know what, I'll give you a special only 2 weeks. After that, regular price. It's just like that. So why is it important for your loan officer who understand the lender's process, their turn times, and everything else to price you correctly instead of pricing you the lowest, right? It's a marketing thing. As myself, as a marketing guy, we always say, oh, I give you, the lowest rate possible. Make it look good, right? And then, the client comes in, give us the paperwork and everything. And then next thing you know, it doesn't go the way, as planned. Well, now we're wasting the client's time. We're wasting our time. We're wasting the bank's time, the lender's time, the investor's time. We're wasting everybody's time. And then we look bad, right? So instead of doing that, let's not, let's do it the right way the first time around. So my moderator, Anthony, he just got the chat box up and running. Just want to say good morning to everybody. Hopefully, if you have any questions, please type in the chat box. Again, this is our live chat box. He will stop me and, bring the questions up to me, and I will answer it live here. And, so that way, we catch everybody, have enough time to answer all the questions. Now, this is for everybody. It doesn't matter what kind of mortgage-related question you may have. It doesn't matter if you have a loan already done or you're going to do one, okay? So if you have any questions, please feel free to type in the chat box and we'll answer them accordingly. All right, let's go back to my screen right here. I know it's a lot of information. Bear with me. I guarantee it's going to get easier and easier. So let's imagine. So you see all these numbers, right, on the 15-day column. 97.817, 98.789, 100.925. Michael, what is that? I mean, all these numbers, right? Okay, let me make it easy for you. When we say 100 is at par, that means 100, we start at 100 is 0. Anything above that, that's a plus. Anything below that, that's a negative. Okay? So 100 is that center point. That means it's at par. If anything above that, that will be a credit. Anything below that, it will be a cost. Okay? So I'm going to give you a perfect example here. If we look at 2.25% on the left-hand side on rates, over to the 15-day, you're going to see 99.635. So with that said, that will be a cost to your client or to your to yourself, right? So how much cost? Well, that depends on how much you want to borrow. So let's give you an example. $400,000 loan amount, okay? So a client came up and said, hey, Michael, I want to borrow $400,000 or refinance $400,000. What is my rate today, right? So I'm going to give you a very quick example. 2.25% at 99.635. So if you take 100 and you minus 99.635, you get 0.365 costs. That means the client need to cover 0.365% of the loan amount, which equates to $1,460 to get 2.25 percentage rate for 15 days. So if I want to make that very clear, is that the client or yourself will get 2.25% on a 30-year fix at $400,000 loan amount if you're willing to pay $1,460. And that's how it works. Now, let's move one step down, meaning your rate goes up 1/8 of a percent, 2.375. How does that work? Well, look at 15 days. You have 100.394. Now you're above 100, so you're getting a credit of 0.394%. So if you take 0.394%, multiply with your mortgage loan amount, which is $400,000, you end up with $1,576 in credit towards your closing. So that's a lot of information, I know. So let's go back a couple steps to see how the broker makes money and how the consumer pays for it. Okay. So a lot of people come up to me and say, hey, Michael, I want to do a no point, no part. Okay, you know what? Someone say chat box is disabled. All right. So someone just text me back. Chat box is disabled. We're going to try to see if we can enable that. Give us a couple minutes.
In the meantime.
Okay, so let's go ahead. If you guys have any questions, let me see how many people are on here. I'm gonna get. Okay, so you know what? This is what I'm gonna do. There's a few people on here right now. I'm gonna give out my personal cell phone number right now, so that way you can text me the questions if you may have. 408-888-9999. 408-888-9999. Text me your questions so that way I can answer them here on live, just in case my chat box doesn't work. Okay. So let's take a couple step back. People say, hey, Mike, I want to do a no point, no cost loan, right? So how do I do that? How much it costs? What is my rate? So normally when a customer comes to us to say, what is my rate? You know, it's hard to say. A lot of my agent, they always say, oh yeah, today's rate is so-and-so, right? I'm like, okay, first thing first, how do you know they qualify for that rate? Do you know their FICO score? Do you know how much they make? Do you know how much their house is appraised for? Do you know, what kind of credit, what kind of debt they got? We don't know any of these things, right? So how can we quote somebody if we don't know all these information? So we are doing a disservice to our community when we say, oh, you know what, we advertise 1.99, 1.875, so on and so forth. So it's a marketing thing where they allow people to call in, get all the information. Oh yeah, I'll give you 1.875, 1.75, 1.625, 1.5, whatever it might be, right? And so when you call in and you say, oh, I just overheard on the radio that you guys have a 30-year fixed rate for 1.55. Say, okay, yeah, we do. Now you have to send in information, right? You have to send in my documentation, so on and so forth. But you say, no, I'm just calling to find out, is it true or not, right? That's all I want to know. Is it true that I can get a 1.5 interest rate for a 30-year fixed loan or not? That's all they want to do. So here you are. Think about this. You advertise at 1.5. You're taking your time to answer this phone call. Now, when I tell you one phone call, we're talking about maybe hundreds of phone calls, right? And people are asking you the same question. Is 1.5? Yes, sir.
So the chat box is working. They just have to refresh their page.
Okay. Chat box is working. Anthony said, please refresh your page, and then it should work. All right. So thank you for that. So you got hundreds and thousands of phone calls coming in, and here you are picking up the phone and say, hey, I just overheard on your radio that, you advertise a 1.5 interest rate for a 30-year fix. Is that true? And you say, yes, it is. And then you go into information. Please send me all this documentation. And they say, oh, no, I just want to make sure it's true, blah, 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 blah. And then what kind of documentation you need from me, et cetera, and et cetera. So what happened is the customer decided to interview you instead of you interviewing them, right? So here you are spending time, 20, 30 minutes, 10 minutes, whatever it might be, for every phone call that you receive when you advertise a rate of 1.5 or whatever it might be. So how do you know that they will qualify? You won't until you run their credit, right? Until you run their credit. Now, even when you run their credit, you have to check their income, right? So you have to make sure they make enough money to qualify as well. And then you have to also check their bank account. And this happens to us a lot. I've been doing this for more than 20 years. Trust me when I tell you, people tell me this all the time. But Michael, the properties, they only owe $200,000, and the house is like $1 million, right? Why the lender and the bank investor are so difficult, right? It's called ability to repay, okay? Ability to repay. So let's just say this. If a person say, oh, I only owe $200,000, and my house is $1 million. Can I just get a 2.5 interest rate? Right? It's not going to happen. All right. Thank you, sir. All right. Thank you, sir, very much. Anthony just gave me a keyboard and mouse, so that way I can kind of help out with this. What am I doing here?
You want to show the doc right now?
1 second. Let me. Holding the mouse backward. That's why I'm like, hey, how come it's not going up, but it's going down? Let me see. Okay, so I'm talking about the. You wanted me to go back to the costs? Okay. Okay. Let's do it this way. So let's go back to the house is $1 million. They only $200,000. Why is it so difficult? Why are you asking for all these documentation? Right? It's called ability to repay. Right? ATR. Sorry. Ability to repay. ATR. Okay. That's on the exam. If anybody who's taking the MLO exam before. Make sure that you know the ATR, what that means. Can you make sure that we remove the box, that yellow and green box? Okay, perfect.
Yeah, they don't see it.
They don't see it? Okay, perfect. I just want to make sure. All right. So what happened is ability to repay. So we're not doing a collateral refinance here, right? We're doing a specific conventional loan where, you must qualify and you must show documentation, right? Full documentation. So a lot of agents come to me and say, well, they're too difficult. They only owe $200,000, and if they're too difficult, they're gonna cancel and they're gonna go somewhere else. And then the agent gets scared, right? Trust me when I tell you, when I've been doing it for 20 years, like I just said, plus more than 20 years, and I get it all the time. Every single month, one of my agents always say, hey, Michael, it's so difficult. The client's gonna cancel, so on and so forth. And I say, look at me. If I have enough money to give it to your client, I don't care. But I don't. Guess what? I don't make the rules. The bank does. The investor does. So they are the one that asks for those documentation, not me, not my office. So therefore, please, submit those documentation so we can move forward and get the deal closed. Okay? So with that said, I want to make sure that you understand that it is not as easy as it sounds, okay? So there's a lot of people, company, organization involved in a real finance, a real estate refinance, or a home purchasing mortgage, okay? I'm going to give you a couple of examples. Number one, escrow title, okay? So in California, because every state is different, I know that Texas uses attorneys. They also use title company, but Texas use attorneys, so their fees has to be involved, right? So here in California, specifically in Santa Clara County, we use escrow/title. So they need to get paid. So who pay, right? The client does. Okay, I'm telling you right now, the client does. Okay, everything that we do on a refinance, the client pays. Okay, and people say, well, but I don't pay nothing, Michael. I mean, I never pay anything on my refinance. True, but I'm going to show you why you are paying for it. It's just you're not paying out of pocket right now, but you will pay out of pocket every single month, okay? So I'm going to get into details about that in a little bit, but I'm going to go through what's involved. Escrow title, right? So when they are involved, they need to insure your title of the home. So that's a cost. Number two, people who courier your paperwork. So we have to pay for courier fees, right? And then we have to pay for notary fee, right? Because they have to notarize your documentation. So someone has to pay for that. And then we have to pay for recording fees, right? So someone has to pay for that. So once you sign the documentation, someone has to take that documentation and go down to the county and record it, right? Someone has to do that, okay? So with that, I'm going to go ahead. I think, is this showing, Anthony?
Yes.
Okay, so I'm going to go ahead and type it here. So what we say is courier fee, right? Someone has to pay. And then notary fee, right? And then recording fee, right? So so this is where all the fees from escrow, this is only a short list, but encompass quite a bit of it. I mean, so someone has to pay for that. Who does? The client does. Okay. So now I'm going to go to, and I'm going to go ahead and delete this. And then the next one will be, I'm going to go ahead, client pays. Okay. That way, make it easy. Okay. So now the banks or investors or lenders, however you want to call them, right? So now they have, we call it underwriting fee, right? Who pays for that? The client pays, right? We have a flood cert fees, certification, right? So who pays for that? The client pays for that, right? And then, so when the banks, when you submit a deal to them, someone has to underwrite it. They have to hire someone to do it. They have to pay them on a salary base, right? And bonuses. So, and then also they want to make sure your home is not in the flood zone. Someone has to certify that, okay? Now, we're going to go to the next one. Now it goes to the broker side, okay? So I'm going to go ahead and this is the needy stuff that a lot of people don't like. And I know a lot of people are going to, call me and kind of like, Michael, why are you giving us why are you giving away the secrets of how we make money and blah, 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 blah. Again, at the beginning of this video, what we're trying to do here is educate the consumer, which is you guys. So that way you guys can make an educated decision when you do a refinance or when you buy a home. Okay. And that's the reason why we do this. Okay. All right. Broker side. Okay. So here you are, it doesn't matter who you go to. It could be Directqm, it could be ABC, it could be, Rocket Mortgage, it could Wells Fargo, Bank of America, Citibank, Chase. It doesn't matter who you go to, right? So, hey, Michael, why do I want to go with you, right? So first and foremost, let's go about how the broker side charges, okay? So that way you can say, oh, but I don't pay them nothing. Let's go first. What are the fees first? We call it a loan origination fee. Okay. And then we have a processing fee. Okay. So these are the two major fees that broker on the broker side, mortgage broker will charge. But they don't charge me nothing. That's where I come in, no point, right? No point, no origination fee. So let me go tell you why that is not the case. Okay, broker side. So we're good on broker side. So I'm going to tell you why there is no such thing as no point. So can we go back to that screen where we see that 100 point something? Oop. So I just need to see that 100. I'm going to show you that screen. I'm going to show you that screen 100. Anthony, if you can pull up that screen real quick. Okay, with a circle. All right, there we go. So remember this slide that I showed you earlier? So if, in fact, that it is a no point, that means a broker work for free, they don't charge you nothing, right? Then if that's the case, then if I tell you, Mr. and Mrs. Smith, today your interest rate is 2.375, okay? And I'm not charging nothing. I don't get compensated nothing, right? Then your client, Mr. and Mrs. Smith, should get $1,576 towards their closing costs, okay? Mr. and Mrs. Smith should get $1,576 or 0.394% of their loan amount back at closing. Okay, so that's what they're supposed to get. Okay, so how does broker make money? Okay, let's get into the meat and potato. Where'd it go? Okay, how does broker makes money? Okay. All right. So let me see here if I can do this. All right. If you can see this, how does broker make money? Okay, let me ask you a very, very simple question. All of you here and the viewer, do you work for free? Nobody works for free, right? Nobody, right? I don't work for free. You don't work for free, right? Everybody has to make some money somehow, correct? So when a broker say, "Oh yeah, we give you no point no cost at a certain price," that's not true. That's why in this video, it's not necessarily true. There's no such thing as no point no cost. You're paying it, and I'm going to show you how much you pay it throughout the life of the loan. Okay, so the broker compensation is built in to the interest rate. Okay, let me say that again. Broker compensation, meaning how they make money, is built into the interest rate. So let's go back to that screen, Anthony, if you may. All right. So for instance, I'm going to give you a very simple example because I don't have the screen up where I can write and all that, but I will. So let's just say my broker office makes $1,500 every single deal. Let's just pretend that happened, right? I'm going to charge a customer, no matter how much the loan amount is, $1,500 every single deal. So if that happens, which interest rate do you think that I will tell Mr. and Mrs. Smith? Right? I tell them 2.375 today. No points. But clearly, if you can see on the screen right now, 2.375, you just said, Michael, we get $1,576 back. Credit. Why is it no point? Well, we need to get paid. So we tell Mr. and Mrs. Smith, right? I'm going to go ahead and type this up. So if that, make it easier. So thank you, Anthony, I keep on talking. I forget to tell everybody. So 2.375, okay? And then we have a credit of 0.394% of loan amount, okay? Which equates to 1,576. Oop, where'd it go? 1,576, okay? So if my broker comp is 1,500 per file, I will quote 2.375, no point. And we will give $76 back at closing. Okay, so I just typed something in. So Anthony's gonna, post this up, so that way you guys can see it. So here you go. So the broker, for instance, if my office say, okay, you know what, I'm gonna make $1,500 every single file. As you can see with this example, I will quote the customer, Mr. and Mrs. Smith, in this case, 2.375. Why? Because clearly you can see 2.375, I get a credit of 0.394% of the loan amount of $400,000, which equates to 1,576. But I'm only charging $1,500. By law, I cannot make more than $1,500. I told the investor, every single file I'll give you, that's all I'm gonna make. Okay? So what happened to the $76? Well, I tell Mr. and Mrs. Smith, Mr. and Mrs. Smith, you know what? I'm such a good loan officer. I negotiate with the bank and investor to give you $76 back at closing. How's that? Mr. and Mrs. Smith is happy because the 2.375 interest rate is low. They like it. And everything else, everybody's happy, right? And because they're not paying out of money, out of pocket, but yet they get $76 back. Win-win, right? Yes and no, right? Mr. and Mrs. Smith is happy. $76. They get $76 back. We here at Directqm get $1,500. Everybody happy. But technically, Mr. and Mrs. Smith will pay every okay? Even though Mr. and Mrs. Smith did not write a check to us at $1,500, but it was priced in, okay? So it was priced in on the interest rate at 2.375. Okay. So that way they don't have to pay that $1,500. So now I'm going to do some calculation right now because I was not organized and I apologize. 2.375. So I'm going to give you an example. I'm going to go ahead and clear this up right here. I'm going to give you how much interest. Okay. Okay. So for instance, 2.375%. Okay. So they're going to payment is $1,554.61 every month. Okay. Okay. So let's say I'm going to give you another example of 2.25. Let me see here. $2.25. Oops, sorry. 2.25. Your payment is $1,528.98 per month. Okay, as you can see here, how much interest do you save between the two, right? So I gave Mr. and Mrs. Smith 2.375 interest rate because they don't want to pay any points, right? So I tell you, okay, well, today's rate with no points is 2.375. Why? We're getting $1,576 credit, but that $1,500 come to us because we don't work for free, and that $76 go back to the customer. Okay, so now let's look at how much interest between 2.375, okay, I'm going to just put down interest that you pay over the life of the loan will be 159. Let me put the dollar sign. 159,659.60. Okay, and let's do 2.25 interest rate and how much interest you pay for the life of the loan. 150,432.80. So let's just say Mr. and Mrs. Smith didn't want to pay the $1,500, and I could have, if they pay me that $1,500 out of pocket, I could have give them a 2.25 interest rate, which will save them roughly about $9,000 over the life of his or her loan. So as you can see here, no points cost Mr. and Mrs. Smith $9,200 over the life of the loan, just because they don't want to pay the $1,500. Okay, so what does that mean? Is there such thing as no point? No, you pay it either now or every single month, right? So a lot of people say, well, I'm not going to care. I'm going to die before that happens. I'm going to sell my house when that happens, etc., and etc., and etc., right? But even still, you're paying the difference between $1,554 every single month, right? $1,554.61. You're minusing the $1,528.98. Every single month, you're paying an extra $25.62 that you don't have to. I mean, of course, there's more to it, but I'm going to say there's a difference between $25 every single month, right? Okay, and then so every year, right? Every year is $300. Yeah, oh, I was right, $300. Okay, extra. Okay, so basically for $1,500. Right? Because remember, it costs $1,500 to do the loan, right? Will take about 5 years, right? Now, if you say to me, Michael, I'm not going to keep my house within the next 5 years, I'm going to sell it. Okay, if that's the case, don't do the 2.375. Hey, Michael, you know what? I really don't know. I might stay in it longer than that. Well, then you know what? Let's get the lower interest rate, because within that 5-year period, it pays for the cost and everything else. Afterward, you're saving $25 every single day, every single month that you sign that check for that mortgage payment. $25 every single month. Now, how powerful is that? Well, over the life of the loan, again, you save over $9,000 of interest. Yes, sir.
We got a question from Tran.
Yep.
If we want to see the chart with the rates and the 15, 30, 45 day from the broker, what is it called again?
Okay. So Tran, I'm gonna repeat that question. Viewer of ours, Trans, asked if we want to see the rates with the chart of 15, 30, and 45 days. What is that called? Okay. So when you call a broker office, you say, hey, you know what, Michael, I want to see the rates for today. I want to see everything. I want to see the chart. I want to see the pricing. I want to see everything. Okay. Then you know what? I can take a snapshot of it and send that to you. Not a problem. So you can see it for yourself. Now, most people don't want to see it. Most people don't care about it. But again, in this live session is to educate you guys as consumer. So that way, when you call a broker office, a mortgage loan officer, and when you ask them, hey, Mr. Loan Officer, can you send me the rate sheet? Can you send me a snapshot of what the rate is for today? So that way I can see the pricing, right? Guess what? The mortgage loan officer is going to say, well, you don't need to. There's a lot of this, a lot of that. You're not going to, which is very true. Okay. There's a lot of adjustment, right? Based on a lot of criteria. And I'm going to tell you some of the criteria here. And now, will it help you? Maybe, maybe not. Will it cause confusion? Yes and no, depending on how, well-versed you are in the mortgage industry. But let's just say this, even let's say for a person who is not well-versed, it's good to know why. So that way your MLO, your mortgage loan officer, can explain that to you. Now, if that mortgage loan officer cannot explain that to you, then you should go find someone who can, right? Obviously, they don't know what they're doing. So I'm going to go ahead and type in some of the criteria that can change, right, your interest rate, okay? First and foremost, your FICO score, okay? That's very important, right? Because it varies between one person and the next, and the investors price their mortgage interest rate based on that as well, okay? LTV, loan to value. What does that mean? That means it depends on how much you're borrowing versus how much your property is worth. So that percentage plays a key crucial of how the interest rate is derived. Next one. I'm looking and typing at the same time. The next one will be CLTV. Okay, what does that mean? That means combined loan to value. So for instance, some people, because of the economic downturn and because of equity has been, been raised for everybody else here because of the pricing of homes are so dramatically high. So you have a lot of equity, right? So a lot of people go out and get a home equity loan, right? So for instance, I'm going to give you a perfect example. Mr. and Mrs. Smith borrow $400,000 because the economic, downturn and everything else. They're afraid. Typing it in. All right, so I'm gonna go ahead and type it in. Anthony kind of gave me a signal here. So for instance, first loan, okay, 400K, okay. So what Mr. and Mrs. Smith's gonna do is say, okay, I'm gonna borrow I owe $400,000 right now, but because of the economic downturn, I just want to make sure that I have an extra cash somewhere so that way I can access it when I need to, right? So they go out and apply for a line of credit or a home equity line of credit. It's called HELOC, okay? Home equity line of credit. So Anthony, if you can type that in for me, that'd be great. That's what HELOC stand for. So, but now they want to refinance, but they don't want to close that HELOC. They want to keep that for a rainy day, emergency, whatever, a vacation, whatever they want, right? So now I'm going to go ahead and home value. So their home value is $1 million, okay? But they want to refinance for $400,000, but they have a HELOC, home equity line of credit, of $100,000. So I'm going to ask this question to everybody. What is the people who've been doing loans and who knows what they're doing? What is the loan to value and what is the combined loan to value percentage? So if you can type in the chat box, answer that would be great. I need to know what is the loan to value, LTV, and the CLTV. I think you type in LTC. No. The first one. The first L.
Oh. Yeah, they can't see that.
Oh, okay. Okay. So anybody who can answer that would be great. I want to see how much you guys know so far. I know I didn't go over it, but I'm going to go ahead and answer them. So your LTV will be 40%. Oop, not $40. And your CLTV will be 50%. Okay? So how does that price differently, right? So the investor or the mortgage lender or banks or whatever, they look at it and say, okay, well, technically, you're borrowing 50% of the value, not 40, even though you're applying for a $400,000 loan amount. Why? Because the next day or even tonight, you can go out and say, I'm going to draw $100,000 to buy myself a car, a supercar. I want to buy a $100,000 car. I'm going to go out to my bank, draw $100,000 so I can get a car. Well, guess what? Your debt right now is $100,000 for the HELOC and $400,000 for your property. So when you combine them together, that's why they call it combined loan to value, is $500,000. So therefore, you're technically borrowing half of your home value, all right, 50%. So how does that price in? So that's one. Another thing, I'm gonna go ahead. Let's go for number 4. Okay, number 4. All right. FICO score, LTV, CLTV, income, debt to income ratio. So income. So another thing is income. So the reason why we have income is that, people say, well, what if I'm self-employed? All right. Well, self-employed, we have different programs for self-employed who hide their true earnings in their legal tax preparer, so they can figure out how to use the appropriate IRS law to help them pay less in taxes. But because of that, they fall short of qualification, so therefore they have a different program, therefore the rates will be different. So that's another issue as far as income wise. But now if they make enough money and they qualify, then you go with the normal program. Now the next one will be debt to income. Debt to income is very important. The reason for that is debt to income is a little bit important. So the reason for that is because if you go with a lower number versus a higher number, so the pricing is different. So I know I deviate a little bit out of this. Thank you, Anthony. He's my moderator. He's getting me on track. Let's get back to why no point, no cost is important to us, and there's no such thing as no point, no cost. So this is some of the criteria that will dramatically change your interest rate. So when you ask for a rate sheet or a snapshot of the mortgage interest rate for that day, again, you're only seeing what you're seeing as far as rate are concerned, but you don't see any adjustment, just like I just lined out over here, that apply to you and your client. So I want to go ahead and go back to the no point, no cost. But at this moment, I'm going to stop here because we will do more videos to cover everything that we spoke about so far today. All right. So remember we talked about escrow costs, right? I think I talk about, escrow, title fees, title courier fees. I think that's what I said. Notary fees, right? And recording fees, right? So these are fees, summary of all the fees that escrow will charge, okay? Someone has to pay for that. So what I'm gonna do is I'm gonna give you a, let's say it's gonna cost $2,500, everything, right? Let's say everything costs $2,500. Okay, so total cost. Okay, so total cost $2,500. Now remember, that's escrow. Remember us, broker compensation, right? Total cost $1,500, right? And then lender and investor costs, right? So I'm gonna say, I don't know, total cost, what's a good number? $1,200, okay? So if you add them all up, 2,500 plus 1,500 plus 1,200, what do we have here, guys? $4,000, $5,200, right? Something like that. 25, 3, 4, 5, 5,200, okay? So for this refinance, it's gonna cost them $5,200. So now we can say, well, no point. I'm gonna go for no point, no cost. Mike, I want no point, no cost. I don't care. I don't care what my interest rate is. I just don't want to pay nothing, right? But there's some other costs that we forgot, right? Remember, right? We have appraisal costs. We have credit report costs, right? Right? And we have other costs involved. So, but I'm gonna just not deviate from here. We're gonna just go ahead and see how that $5,200 come into play. So let's do this. I want to do no point, no cost at 52. I'm gonna delete all this for you guys. Okay. All right. So Michael, how do I cover $5,200? Right? That's all you care about, right? Okay. Total loan amount is $400,000, right? So how do we cover? So let's do this. I'm gonna do some simple math. Anthony, can you pull up the rates earlier, that screen with the interest rate, please?
Yep.
Perfect. 5,200 divided by 400,000. So I'm gonna do a quick math here. I'm gonna type this. You don't see it yet. Okay, you want to go ahead and come back? All right, so this is what's going to happen. In order for you to do a no point, no cost loan, we will need 1.3% right here. I'm going to try to bold this. Can I do that here? Oop, nope, wrong keyboard. Okay. Anthony, can you help me? There you go. And underline, make it bigger, whatever. Appreciate that. Okay, the number, there you go. Yeah, cool. All right, perfect. Thank you, sir. So basically, for you to do a loan amount of $400,000, and we're gonna say an estimated closing cost of $5,200 total with everybody's involved, right? It's about 1.3% of your loan amount. Okay, so what does that mean? Let's pop back to the screen of the interest rate. All right, so now if you look at this, let's use 15 days column. Okay, remember we need to cover how much? 1.3%, right? So let's look at the rate. So we're gonna give Mr. and Mrs. Smith two options, right? 2.5% or 2.625. The other, if you can go back to the one without the circle. Thank you, Anthony. So we're going to give Mr. and Mrs. Smith two options. Okay. So here we are at 2.5%. I'm going to type this in as 100.925. Okay. And then 2.625% at 101.795. And then remember, we have 100 is at par. So we have 1.795 here, and we have 0.925. Okay, Anthony, can you change the screen real quick for me, please? Sorry. Alrighty, so I'm gonna move this up here so everybody can see. Okay, if everybody can see this, I hope. I'm gonna do one more. Yep. All right. So as you can see here, I'm gonna give Mr. and Mrs. Smith two options: 2.5% and 2.625%, because they want no point, no cost, right? So Michael, why you give them 2.5 when they say no point, no cost? It doesn't make sense, right? Well, technically, I want to show them that, you know what, this is possible, and this is how much savings you can do as far as interests are concerned. So you have to really know your client, guys. And I get this a lot where people don't. Okay, pricing. This is 15 days price. Okay, and this is par, and this is net. Oh. Okay, guys, thank you. Okay, actually, you know what? Let me do this. Hold on. Let me do this. Sorry, guys. I'm gonna go ahead and just do pricing. Okay, that's how we talk anyway. So remember, so they say, Michael, why you give them 2.5 when we only have a net of 0.925 credit, right? We need 1.3 to cover everything, right? Why are you doing that? Why are you giving them that option? Well, we want to let the customer choose. We don't choose for them, right? But we need to be transparent. We need to let them know, hey, look, you can get a 2.5 interest rate, but this is what it is. So you're going to have a net cost or net credit of 0.925 right now with the interest rate, but it's going to cost you 1.3. So therefore, you need to pay 3/8. So it's 0.375, which equates to, I'm going to type this down if I can do that. I'm going to do it right here. Actually, you know what, Anthony, can you add me another column?
Yeah.
Appreciate that. All right, we can do that. Okay, so total, how's that? Okay, so 0.375. Oh, sorry guys. Whoa, 375 cost. Okay, so the total cost is roughly about 1.3. So my net pricing, as you can see here, right? Because par is 100. Remember, we start at 100, which is 0. But at 2.5, you get 100.925, which is a credit because it's above 100. You get a credit of 0.9. Oop, it got disappeared on me. That's okay. You got a credit of 0.925. Okay. And because you need 1.3 right here, right? You're minusing the 0.925. Therefore, you have a net cost of 3/8. So how does that translate? Can you add me one more column, please? Okay. Okay, I don't know how we do this.
Make the text smaller.
Everything?
No, I got it.
You do it? All right. Anthony will do that for us. Okay. So this one will be a cost of $1,500. Okay. So here we have, so with that said, your client need to pay $1,500 to close this deal, right? At 2.5 interest rate. Okay. Now let's go 2.625. Then how much, right? So we have 1.795 minusing the 1.3. So you have a net of, I'm going to put a negative here, 0.495, okay, times the 400. So you have a credit, negative, we call credit, 1,980. Okay, so as you can see, the difference between the two, right? At 2.5, the client need to write a check for $1,500 to close the deal. At 2.625, the client will get back $1,980. Now, of course, Some of you out there say, hey, Michael, you forgot to talk about prepaid interest, home insurance, property tax, all this other stuff. I get it. I will go through all of that. I promise you in the next video. Okay. But at this time, I just want to show you the very simple calculation of there is no such thing as no point, no cost, right? Either you pay for it up front or you paid every single month for the life of the loan. I'm not going to say 30 years, right? Because what if I only hold it for 1 year, I'm going to sell my property. If I hold it for 5 years, I sell my property, right? I hold it for 10 years, I sell my property. For the life of the loan, every single month. Okay? So with that, of course, the lower interest, you save more money. With higher interest, you pay more interest. Makes sense, right? So with that said, do you guys have any questions so far? And I hope that I'm able to cover no point, no cost is technically not true. Okay? So there's no... Yes, sir.
So there, we have a question from Tran. So there is the difference in pricing for 15, 30, 45 day. What is your recommendation for the consumer to lock in their interest rate for 15, 30, 45?
Perfect. So the question is, because we have options, 15, 30, and 45 days lock, how do we determine which pricing and how many days we should lock a file? We, as expert in our field, like I said again, we've been finish 15 days for you guys because you guys are so good at what you guys doing. You guys always get our paper documentation on time and et cetera and et cetera. Then we tell the client 15 days is good enough. Okay. Now the problem here again, keep in mind, guys, your client, how fast they can get the documentation, how accurate they get the information to us, the faster we can close the deal. Trust me when I tell you, we don't work for free, but we don't get paid until we close a deal. So the faster and the sooner we close the deal, the sooner we get paid. So obviously, there's an interest in us to close your file as soon as possible. Hope I answered that question. Any other questions?
Any and all mortgage related questions?
Yeah, any and all mortgage related, guys. Any and all mortgage related questions, your client, your friends, family. Maybe you have a mortgage right now. You want to say, hey, Michael, is it a good deal for me to do this or not? If you don't mind sharing me with your mortgage interest rate, how many years you have left, I'll tell you. I mean, I can do the analysis on you within the next 5 minutes. I'll give you the full analysis if you don't mind sharing online. But if you want to share privately, please send me a text if you have my phone number. That way, we can give you the correct analysis. So that way, yes, you should do it. No, you should not. Some people say, hey, Michael, yeah, interest rate is so low, should we I'm going to refinance. Well, not necessarily. It all depends, right? I have a client where right now they're paying about, I think it's about a little bit over 4%. Well, duh, right now it's only 2 point something percent. Why they're not refinancing, right? Well, what if they want to sell their home in a year or so, right? How much money can they save? Well, think about it. If they're at 4 point something, it depends on how many years they have left, how much they have left in principal balance. So there's a few, factors that we need to look at before we say it's a good deal or not. Okay, because if they only have X amount of dollars, which is very minimum, and the interest rate, yes, is high, right? But they're gonna sell their home within the next, a year, 2 years, 3 years, or whatever it might be, or they are preparing to pay it off, things like that. Then there is no point for them to pay for all these fees to get a better interest rate when they are planning to either sell their home, pay off their house, etc. Okay. So I have a text coming in. Oh, so just want to talk. Let me see. Talk about. Okay. So, oops. Sorry, guys. We have our new YouTube channel up. I just want you to look at some of the videos we put out. We'll be consistently putting out at least 1 to 2 videos on a weekly basis. It's going to be like a quick 3 to 5 minutes, mortgage related, right? You have any questions or anything, comments, please let us know so that way we can answer them for you. We're going to do a Saturday live every single Saturday. We're going to bring new content to everybody to educate the consumer. We're going to have realtor coming onto the show. They're going to talk about their company and their services. If you out there right now watching that you're not in the real estate industry, it doesn't matter what industry you're in, right? And if you're good at what you do and you want to reach a lot of viewers out there, let me. There you go. Sound's back on. Sorry about it, guys. We have no sound, so I apologize. I think I know what happened. Yeah, okay. So, oh, you want to clear that screen? I'm going to recap about no point, no cost real quick. It's very important that the consumer and you guys and agents understand that there's no such thing as no point, no cost, because the client either pay for it now or the client will pay for it every single month for the life of the loan. So anybody tells you otherwise, they can come talk to me. They can always call me, whatever it might be. I'm open. I'm open to hear criticism, comments, whatever it might be, because at the end of the day, you, my consumer, my agent, as long as you're educated in this, this subject, that's all I care about, right? Because I want you to make an educated, informed decision. And without information, without the education, you won't be able to make that. You'll be guided by somebody, your family, your friends, whatever it might be, to something or to a product that might not suit you, okay? Again, just because interest rates are low, it doesn't mean you should refinance, okay? So keep that in mind. There's a lot of analysis we do for people. Even their interest is high, we always ask them to give us information so that way we can, make a true analysis for them. Okay. All right. So realtors, I want to invite all realtors to join our channel, be on our show. I know it's COVID, and everything else. Our studio is set up where, we're 6 feet apart. You can kind of, relay to the community your services, who you work for, your brand, whatever it might be. Here we are. Like I said, this channel, it belongs to you guys. use it to your, utmost ability, use it to your advantage. It's no cost to you. I invite all of you guys, business owners, realtors, mortgage people, come on in, talk to me. Have a show so that way we can educate consumer. At the end of the day, you and I, we just want to team up, educate the consumer so that way they can benefit, right? They benefit, we will benefit because now they understand that we're transparent, and they will give us a shot because of that. Okay, so hopefully, this live stream bring you good information so that way, share with your clients, share with your families. I invite everyone, doesn't matter my competitor or not, you're working for my competitor, you're planning to come over, whatever it might be, I want you to tune in, like, subscribe, share the channel so that way we can continue to bring these content to you. So until next time, be safe.